Gold prices. We're slowing down a little bit. We've run into a very, very key area of supply here at 44.40 towards the 50 region. There is on the 4 hour chart, there is risks of a potential, these equal highs, risks of potential double top. Not to say that it's going to definitely happen, but there is a risk. And obviously, this neckline area of liquidity back down at 43.25. We've so far seen obviously a bearish rejection here in this obviously supply area. This is the zone. If we want to push to the upside, we have to break through, and then we can be pushing into firmly into sort of 4,500 territory. Otherwise, if this key near-term support holds just below the psychological 4,400 area, if it fails to hold, then we're going to drop. And obviously, there's the risk of that. We challenge this liquidity, and what could happen here, where all the stops are, people trailing their stops with the higher highs, the high lows, the market structure. There's a risk that this just drops through, stops to trigger to the downside, and we see quite a fast drop for gold. But that is obviously the risk of that happening. And look, guys, what's happening right now is there are increasingly, well, there are risks of the inflation trade creeping back up again because Trump has threatened to bomb Oman. Also, keep in mind that US and Iran still hasn't agreed a deal. And obviously, with all that, oil prices remain elevated. If you look at oil prices, very much tilted to the upside. As you can see here right now, we're closing this gap area here, getting ourselves comfortable above that, which looks subject to some further potential buying pressure there for oil, because obviously there's a limited supply as well, and this goes on. And yields remain elevated. Remember, yields being elevated is not a good thing for gold right now. And obviously, we're breaking out to the upside. And obviously, that would, in theory, with yields rising, that is negative for gold. So just keep in mind that the risks are rising at the moment of gold for gold. But this is the roadmap right now. But as I say, as it stands, there is a risk that this plays out to the downside, back to this key area of liquidity, and it could end up seeing stops being triggered to the downside. But yeah, if we want to push to the upside, break down this zone, then we can push north. Guys, I have a playbook all ready for this. If you want all this knowledge, by the way, you see, there's a lot of macro going on right now. Things are chopping and changing. If you want all this knowledge and be able to adapt and adjust and capitalize as we've been capitalizing on this upside pressure for gold because we understood the macros. Check all the resources via the links below. Other than that, I'll catch you on next update.